Welcome back, everyone. We're super thrilled to jump into our next session. I'm Stéphane Renevier, an analyst here at Finimize, and it's a pleasure to be joined by Duncan Moir from 21 Shares for the new era of investor access through crypto exchange-traded funds and exchange-traded products. So in terms of format, hi Duncan. In terms of format, this session will run as a 15 to 20-minute chat, followed by audience Q&A. So, feel free to submit your questions at any time using the Q&A box. So, we can bring them into the conversation. Duncan, absolute pleasure to have you with us today. Welcome to the Modern Investor Summit. I think let's just dive in. We have so much to talk about. So we've just had a massive, I think that's the right word, massive expansion actually in how investors can get crypto exposure, through regulated ETFs and ETPs. So, from your perspective, what's actually changed in terms of investor access, and who's now able to implement crypto in a way they couldn't before?
Yeah. I mean, look, I think you're right. Massive is the right word, right? The US has had the most successful ETF launch ever with the Bitcoin ETFs, which is pretty phenomenal. We just had the UK retail market come on board as well. And we expect probably countries like Korea and maybe even Japan to come on over the next year or two. So massive expansion of kind of access to crypto for the everyday investor. So now investors can get access to crypto and ETFs and ETPs in much more kind of simpler products, much cheaper to use, much easier to use, and in many cases much safer to use than investing direct. So that's the big shift. I would say that European market and European investors have had access like that for several years. So the market is much more mature there. And now the European investors have enjoyed the benefits of a very wide range of product offerings for, I guess, since 2018 when 21 Shares launched the first physical product in the world.
So now let's get practical. For someone building a diversified long-term portfolio, what's the most sensible, the most practical way to actually use crypto ETFs or ETPs, in terms of sizing, rebalancing, implementation, and, basically also how to avoid the common mistakes that you see investors do?
Yeah. So I think, look, I think today, what I would say is see it as a long-term investment. The buy and hold mentality really can win here. You should probably view crypto in your portfolio as a fairly fungible investment right now. So many of the cryptocurrencies are correlated in some way. We would think the typical investor should have about 5% allocation in their portfolio. From what we've seen, 5% allocation to Bitcoin, for example, in a traditional 60-40 portfolio can have upwards of about a 20% increase in risk-adjusted returns over time. And the surprising thing there is that we don't see volatility increasing materially. Now, if you want to get a bit more clever with the investment, more sophisticated, you can replace some of that Bitcoin for other crypto assets. The correlation is not one, right? They have below one correlation, and so you can actually further increase risk-adjusted returns by replacing that Bitcoin with other types of crypto currencies. In terms of rebalancing, again, I think the buy and hold mentality really does win out, but you want to manage the overall contribution to risk in your portfolio alongside other assets. And as we know, cryptocurrencies, because of the volatility in them, can have a habit of going up or down a lot in the portfolio and having being a materially different sizing in versus the other positions.
Now, investors face a pretty exciting, but also I would say intimidating menu of single assets products, baskets, staked TTPs, and lots of other cool names and products. But what are the key differences that actually matter in practice, and how should an everyday investor decide which structure really fits their goal?
Well, there's definitely a lot of options on the table now. I mean, look, we are partly to blame for that as well. We have the largest offering in the world, I think 55 products today. But that is about giving investors choice, giving them access to the asset in an easy to invest way. The the way I would think about it in terms of the type of the product to make your decision. So Bitcoin typically will be a core holding in most investors' crypto portfolios, and they may want to select other ones around that as more like satellite positions. I would say try to diversify the types of exposure you have between the layer one blockchains, so the Ethereum, Solana, etc., and then other cryptocurrencies where they're more like applications being built on those. So decentralized exchanges for example. But the big differentiator, or the thing that people should really think about is actually the issuer, and the group that they're comfortable taking that making those investments with. I would say pick an issuer that has been through the market cycles. We've been through several bear markets now over the last few years. Pick an issuer who understands the risks, who understands the liquidity needs for running these products. I think that long term will have a bigger effect on your outcome from your investments in crypto.
Now, I mean, crypto is probably one of the most innovative field out there. Let's be honest. Looking ahead, which innovations, tokenization, yield generating ETPs, new ETF structures, like which of those innovations you think is most likely to really change how investors actually implement their crypto exposure over the next few years? And more importantly, which one are you most excited about?
Oof. I think okay, so there are a lot of different innovations out there. You mentioned like tokenization in blockchain. People have been talking about that for years. Digital identity. I think payments now is really one that's very exciting and has taken over a lot of the interest of the banks, for example. But the question on really what how will people invest, or what innovations will change how they invest? Actually, I would say the big fintech investing platforms, the Robinhoods, the Revoluts, coming on board to crypto and to crypto ETFs and ETPs actually is going to have a huge impact. The reality is that most investors want to have all of their holdings, all their investments in one place. It's just easier to manage that. And previously, we've had traditional investments available via the kind of the older incumbent brokers, and crypto from the new platforms, the Coinbases, the Krakens, etc. But most investors want that together. The fintech platforms, like, as I said, like Revolut or Robinhood or Nubank, depending on where you are, actually solve for those problems. So I think that's going to be a huge driver of adoption for crypto. In terms of the opportunities, like right now and probably over the next year or two, the yield-based products are really interesting. Part of what we want to do is bring institutional-like investments to retail investors. Hedge funds and other institutional investors have been playing what's called the basis trade a lot, which is long the spot, short the future, capturing the difference in price. Trades like these and additional yield-based trades, I think, could be really interesting for most investors. So that's one to watch out for sure.
Thanks. Now, if you zoom out beyond ETFs and ETPs, what's the one broader crypto trend or general idea that you think investors should be paying closest attention to right now?
There's no way there's one. I would say that's but look in crypto, just like top high level in crypto. I think one of the most exciting things that's going on now is in the decentralized exchange space. So these investing platforms that are built on blockchains that allow people to invest much more easily in spot and futures products. So Hyperliquid is a great example of that. Phenomenal product, $150 million per month in revenue. one of the most profitable companies in the world, if not the most profitable company in the world by number of employees. Things like that are really exciting. Other cryptos that have built up big communities, big followers, who are then going to commercialize that and leverage those communities. So Dogecoin is one that I would call out, which obviously started as a joke, as a meme, and now has got this massive following. They're starting to pivot towards real world applications and payment applications, and they already have, hundreds of millions of followers to convert over to those applications. But those would be probably some of the really big ones, and the big thing to watch out for, which I'm not sure everybody is paying attention to, is institutional buying of cryptocurrencies. So Bitcoin right now in particular, we're seeing some in Ethereum, but just to give you an idea of the impact that can have, this year, the last 12 months at least, supply or demand has outstripped supply of Bitcoin by more than 5 times. And the institutions are just getting started. So there's a lot of volatility in the market right now for sure. And look, this is something that we've been through. And to be honest, the moves have not been as big as what we've seen previously. But the fundamentals are still there for Bitcoin and other crypto assets. And the buying for sure is there, and it's only going to continue in our view.
Yeah, I think a lot more people are really looking at crypto as a serious component of a long-term asset allocation. But I think you also still have some people that are a bit more skeptical. What would you tell them? Like, how would you convince them?
Look, the way I see it, I usually split crypto investments into 2 buckets, but I'm probably going to have to get a bit more clever with the way I think about it as well. I think about Bitcoin as a store of value. That is its single major use case. Nothing more, nothing less. And I wasn't always a Bitcoin bull. I would not call myself a maxi at all. But that institutional buying and the trend that we're seeing is really making that a real thing. The other side of it is our technologies like Ethereum, like Solana, like Sui, where people are building applications on them. So I think those types of investments as very early stage technology, like liquid venture investing. And as I said, there are new ways of allocating capital, like to the decentralized exchanges, where you're actually investing in companies, more or less. So I think that that's kind of that's the way I would break down the kind of crypto universe. And over time, as more blockchains see greater adoption from institutions and use cases become much more specific to certain protocols, the way that we allocate in our portfolios is probably going to reflect those specific use cases in each protocol.
No, I'm a big believer in having a long-term allocation to crypto, really kind of very long-term, buy and hold, buy the dips. But let's say that, I want to go a little bit deeper. I want to explore some a bit more advanced, or at least, a bit more intermediate strategy. What should I do kind of tomorrow morning? I wake up, have my coffee. What should I do that could be a little bit more interesting than buy and hold in crypto land?
Well, probably should have started this thing with "this is not financial advice," but maybe I'll say that now. But I do think looking at the application layers would be really interesting right now. Look, the market has sold off. I think if you're, let's say, a UK investor who's just about to start getting exposure to it, it's almost a gift, the sell-off that we've had, because it creates, for a long-term investor, creates a great buying opportunity. I would go and start to look into some of the smaller projects that are available in the market through products on regulated securities exchanges, of course, But I would definitely take a look at some of those the application layer, whether it's decentralized exchanges, whether it's yield-based products, or even deepen, so decentralized physical infrastructure, which is a really interesting and very nascent part of the market. There's a lot out there to look at.
Awesome. Thank you so much. So the questions are actually flying in right now. So
Okay.
I think it's time that we move to the Q&A part. So I think you will like that first question, actually. You have a long history in the market. You must be older than you look. I think that's the part that you will like a lot. What made you decide to head down the crypto ETF route? Why do you believe in it so much?
So I started my career in hedge funds. I was a hedge fund investor for many years, and that's actually how I got into crypto. Hedge funds started to allocate to crypto, and so it almost was forced in to look at it. But where the place I was working wasn't quite ready to get in at the time, and so pivoted to looking at the technology, what the underlying technology can do for, let's say, a big asset management business. And that's actually what got me really interested, was seeing the operational efficiencies that can come from blockchain technology, and crypto is really the incentive for entrepreneurs, for innovators to continue innovating and creating great technology. Most of these technologies, the blockchain technologies that we're working with today, would not have been created in large financial organizations, for example, or large tech companies. They had to be that incentive for innovators to create and to continue to create, which is why I believe cryptocurrencies are an important thing. And combine that with another part of my career where I really felt passionate about in creating broadening market access to new investment opportunities. ETFs and ETPs are really a perfect vehicle right now to bring more investors into the market in a much safer way.
Thanks. So does 21 Shares intend to launch blockchain native ETF instruments in the future, assuming today they are all off-chain, representing on-chain underlying assets?
Great question. I mean, yes. So today they are. The way to think about it is we take Web3 and put it into a Web2 financial product. The short answer to the question is yes. I do expect that we will go that way. I do think that tokenization will be a real thing. I do believe again in the operational efficiency. So the back office and middle office of what today is an ETF should exist and operate on chain. And look, we're already seeing some of the plumbing being built to allow for that to happen. So watch this space. I don't be surprised if you see something in the market from us.
Now, this wouldn't be a true Q&A if no one asked about Bitcoin and where it's going. So I guess the next question, you probably expected it. Is Bitcoin still going to be the front runner at the end of 2026, or is there a chance it could be toppled?
Oh, toppled in terms of market value, I would say, look, it cannot be zero chance because that's not realistic. But like the probability of Bitcoin being anything but number one by the end of 2026 is I would still say near zero. Some of the others have a good shot, but we really believe, as I said, the fundamentals are still there. Fundamentals in terms of buying that we don't see anywhere else in that magnitude. So we do believe that Bitcoin is going to be around for a very long time. A number of other investments look interesting, and as I said, the market has almost given people an opportunity to get in at lower prices. So, but yeah, Bitcoin will be here for a while.
What are the advantages of ETPs over single crypto strategies?
I mean, I assume that the question is more around ETPs versus direct, I guess, because obviously many ETPs are single asset products. In fact, most of ours are. We do have basket products, and that was actually the first product we ever launched in 2018 was a basket product. But relative to kind of direct investing in crypto, first of all, available from traditional brokers. So most people already have a brokerage account. They can go and access them. The second one is they use regulated custodians. So a lot of people still hold their crypto on the exchange. And for anyone that remembers FTX, that's not always a good plan. And if you don't hold it on exchange, you've got to manage it in your own wallet. A lot of people do not want that kind of hassle. So knowing that when you buy an ETP, the assets are held with a regulated custodian, I think provides a great deal of comfort. And the last one is cost. While there are management fees to pay for the ETPs, they're nothing compared to the spreads charged by most of these trading platforms to actually buy crypto. A lot of people see the trading fee and think that's the cost of investing when buying spot crypto. They don't look at the spread, so that's like the price that they're paying relative to the price that they could see on the screen beforehand. And you can be all in with trading fees. You could be paying 3.5% to buy your spot crypto, and ETPs can make it a lot more cost effective.
Beyond the big crypto names, or 21 Shares excited about any new products for more out there crypto investing strategies? Can we get an early insight into what to look out for?
Oh, sure. So, like again, not financial advice. We as a business have made our name at being early in these products, in these assets. We want to get protocols and cryptocurrencies into an ETP as early in their life cycle as is possible, really, as is practical from a liquidity perspective and an infrastructure support perspective. We're the largest Solana asset manager in the world, so we manage more assets in Solana products than anybody else. But we launched our first Solana product in 2021, so within 12 months of mainnet. At the time, it was small, not a lot to kind of write home about. And now it's one of the largest and most prolific cryptocurrencies out there. So that's what we try to find those as early as possible. We think ones like Sui could really it's not new, but it could really challenge like a Solana in the future. I've mentioned Hyperliquid, I think, as a DEX. We think things like BitTensor, which has some DePIN to it as well, could be really interesting. But as I said, do your research and not financial advice.
Love that. Next question. How do crypto correlations with traditional assets behave during stressed market environments, and what does it imply for long-term allocation?
Yeah, that's a great question. A lot of people think that so they think that crypto is not a risk asset because some people say that it's a hedge in a portfolio. I mean, or a diversifier. I mean, they're not the same things, right? So crypto is definitely a diversifier in a traditional portfolio. It has correlation of less than one, significantly less than one with traditional assets. But it's still a risk asset. It has a lot of volatility, and what you'll find is this kind of co-skewness. So the correlation will spike at large risk-off events. So typically, if we have a big risk-off event in equities, or that cause equities to sell off, something global growth related, something regulation related, you will see crypto sell off at the same time. But those spikes in correlation tend to be short-lived, and crypto will often recover much faster than those traditional markets. So I think it's a great question because a lot of people look at the kind of the average correlation and think, oh, not risky, but that's absolutely not the case. At the points of inflection, the correlation can increase, and it's a really important thing to remember, and it's part of the reason why buy and hold can really win if you can stick through it.
Another correlation linked question, I would say, how does the current AI market and crypto affect each other?
They are definitely linked in some way. I mean, one of the I mean, interesting, anecdote. But like back in traditional asset management, one of the things I saw was an initial like great interest in cryptocurrency and blockchain, being somewhat short-lived because of AI, generative AI coming up and being the next, the new thing. So taking attentions and resources away from crypto, and I think that also plays in investors' minds as well. So for sure, retail investors, well, you only have a certain amount of money to invest with, right? It's a finite resource for you. And because AI was so hot, I think some investors did put their money there, rather than into crypto. But the two worlds are and will continue to converge. We have AI-based bots for trading in crypto. We have decentralized infrastructure built on blockchain to support AI, generative AI, rather than centralized groups like OpenAI. Um, so I think the two worlds are and will continue to converge. I think that will be a really interesting theme to come out over the next year, actually, in crypto, is the AI tilt.
Thanks, Duncan. Now, can you please comment on crypto ETN products eligible for ISA in the UK? So few platforms offer ISA eligible ETNs, and UK government is planning to move crypto into a different tax wrapper next year, not allowing consumers enjoy the
Yeah,
tax-free capital gains.
it's caused there's been a lot of chatter around about that since the ban was lifted. I mean, that was one of the big questions, actually, was would we be able to put, or would UK investors be able to put crypto ETNs into their ISA and their SIP? And initially the answer was yes, and so people have been able to allocate that way. But the HMRC then have said that they would need to go into these kind of financial innovation equivalent ISAs, which we personally think are not it's not the right move. I think it makes absolutely no sense. That ISA is the proposed ISA is actually it's more suited to less liquid investments. Crypto ETNs are 100% readily realizable, at least where groups are being sensible with their staking in their Ethereum products. Look, I wouldn't have said I don't think it's set in stone right now. There's a huge amount of industry pressure coming upon the government to take another look at this. I cannot see how anybody can be forcibly made to redeem from the products from their ISA. It did not happen when the original retail ban came in. People were left with the ETNs in their ISAs. Hard to see how they could force people out now. But I think that's something to watch. There'll be a lot coming from big groups, groups like ourselves, but also the industry bodies.
And now one last question, but I think this is a great way to actually finish this session. Where do you see the crypto ETF market going? Do you feel it has the potential to scale to the heights of popular indices like the S&P? And ballpark, what timeline do you think is on that?
We're just starting to see that. Yeah, I mean, I absolutely do think that, look, there are basket products out there. There's a mix of different indices. I absolutely do think that there's going to be sort of S&P 500, FTSE 100 type products and indices out there. We have our own index-based products in the US, working with FTSE. But there will be competition, which is a great thing for the market, is to have competition between index providers. We were, I think, one of the first groups to launch a classification standard for crypto. So, historically, it hasn't mattered as much. I think the classifications will matter a lot more in the future, and you're going to see indices, broad market indices. You're going to see layer one indices. You're going to see deep-in indices, all sorts of thematic indices, and then, of course, products off of that in the future. Timeline-wise, I would expect to see more competition at the kind of top level broad market index space next year.
Duncan, thank you so much. This was super insightful. Thanks everyone for your thoughtful questions and active participation. Well, that brings this session to a close, but stay tuned. Don't worry, we'll be back shortly with more great conversation. So see you very soon. Bye,
Thanks.
Duncan. Bye, everyone.
Sure.